You know the envelope. It shows up in your mailbox, pristine and heavy, telling you you're pre-approved. It promises you the world. Miles for your next vacation, cash back on your groceries, maybe a full year of 0% interest. It feels like a gift. But this chart shows the reality behind those envelopes. Every year, the credit card industry pulls in over $130 billion, and they don't extract that massive sum from Wall Street hedge funds or billionaires. That revenue is pulled directly from everyday, working-class Americans. To understand how they do it, we need to strip away the plastic and the points. Every time you tap your card at a register, you are taking out a microloan. The bank pays the store today, and you agree to pay the bank back tomorrow. If you don't pay that loan back in full, the bank applies an annual percentage rate, or APR, that compounds daily. This graph illustrates exactly how extreme that rate is. While a typical mortgage sits around 6 or 7%, and an auto loan hovers near 8%, the average credit card APR towers over them at a punishing 24%. You carry this massive interest rate in your pocket, wrapped in a sleek piece of metal or plastic. The industry thrives by making a highly expensive financial product feel like a harmless, everyday convenience. When your bill finally arrives, the bank highlights a small, manageable number at the bottom, the minimum payment. They present it as a helpful option for a tight month. In reality, mathematicians and engineers calculated that exact dollar amount specifically to keep you in debt for as long as possible. Take a $35 minimum payment. $32 goes to the bank as interest. Only $3 reduces your debt. Watch this play out. Pay only the minimum on a $3,000 balance, and you'll be trapped for 14 years, paying back almost $8,000. Even if you pay your balance in full every month to avoid interest, the bank still extracts money. Every time you swipe your card, the bank silently takes an interchange fee directly from the store's register. That mechanism generates about $40 billion a year. Retailers raise their prices to cover those swipe fees. Whether you carry a heavy balance or pay to zero, you are being taxed simply for buying groceries and paying for gas. The math of credit cards is brutal, but their real power lies in how they hack your brain. Behavioral economists study a concept called the pain of paying. When you hand a physical $20 bill to a cashier, you literally watch your resources leave your hand. A credit card eliminates that friction entirely. A quick tap at the terminal is physically painless. The transaction is invisible. And because your brain doesn't register the loss, studies show people spend up to 20% more when using a card. That extra spending is heavily incentivized by points and cashback programs. But these rewards are not free money generated by the bank. They are funded directly by swipe fees and heavily subsidized by the interest payments of working-class people. This frictionless spending creates a perfect debt spiral. It starts with a manageable balance. Then the car breaks down. A medical bill arrives. You put it on the card, your minimum payment inches up, and the interest outpaces your income. Penalty fees hit, and your APR skyrockets. Multiply that sequence across millions of households, and you reach the current American reality. Total credit card debt has surpassed $1.1 trillion. You might wonder why people don't just cut up their cards entirely. The answer is the FICO credit score. The very banks profiting from your debt helped establish a scoring system that dictates your ability to buy a house, finance a car, or rent an apartment. And 35% of that score relies entirely on your history of actively using revolving credit. You are psychologically manipulated to spend more and systemically required to play the game just to participate in modern society. The system is rigorous, but it is not invincible. Credit cards are entirely neutral tools. If you refuse to play by the bank's rules and understand exactly how the math works, you can strip away their profit and use their infrastructure for your own benefit. Here's your defense checklist. 1. Pay your full balance on autopay to owe 0 interest. 2. Keep utilization under 30% to protect your score. 3. Never take cash advances. They have a 5% fee and apply high interest penalties immediately. If you are currently trapped in a balance, you need a mathematical exit strategy. You can use the avalanche method, attack the highest interest rate first to save the most money. Or use the snowball method, paying the smallest balance first, building momentum to keep going. And there is one immediate tactical hack available right now. Pick up the phone and call your bank to ask for a lower rate. It sounds too simple, but statistics show a 70% success rate for customers who just ask for a reduction. True financial freedom does not come from accumulating the most cashback points or chasing a perfect FICO score. It comes from understanding the math of the system so well that you can safely borrow the bank's money, build your financial life, and never pay them a dime for the privilege.